Welcome back, everyone. We now have our second panel, which will focus on retail payments innovations. Panelists this morning are Jason Oxman, Chief Executive Officer of Electronic Transactions Association, Louis Goodwin, President and Chief Executive Officer of Green Dot Bank, John Muller, Vice President of Global Payments Policy at PayPal, and Spencer White, who's the General Manager at MNO Partnerships at ISIS Mobile Commerce. As I've asked the other panel, please limit your statement to about 5 to 8 minutes so we have enough time for a good dialogue. So we'll start with Mr. Oxman.
Thank you, Mr. Chairman, and thank you for the opportunity to appear here today. Thank you, Commissioner Flores, for the opportunity to be in the great city of Chicago. At the risk of offending our host and ensuring that Mr. Syracuse ignores me for the remainder of the panel, I have to say, as a more than 10-year resident of Massachusetts, go Red Sox. I'm here to set the table philosophically on the future of payments innovation, and I want to direct everyone's attention to the great work of the economist and fellow Commonwealth of Massachusetts resident Clayton Christensen in his work, The Innovator's Dilemma. He talked about how incumbent industries with an entrenched history generally do not innovate because of the threat they pose to their existing businesses. Well, I'm here to offer you the thesis that the payments industry takes exactly the opposite approach to technology and actually has a very good story to tell that many incumbent industries do not have. You heard about that from Chris Daniel a little bit, talking about the record industry's response to online music, did everything it could to kill it because it was in the business of selling plastic discs and didn't know how to make money online. The payments industry over the course of the last 50 years has made itself truly indispensable to commerce in this country. It's truly not an exaggeration to say that all commerce at retail would come to a screeching halt in the absence of the payments industry. Our members at EPTF, 550 companies across the payments ecosystem, processed $4.9 trillion in payments last year in the United States on behalf of our merchant customers. More than 70% of the GDP of the United States is commerce at retail, and more than 70% of payments made to retailers are via electronic means. Truly, the common enemy of the payments industry is cash. And we want to make sure that everyone has the opportunity, from retailers online to retailers in brick and mortar stores, to accept their customers' preferred form of payment. Now, over the course of the last 50 years, we've all been familiar with the plastic card with the magnetic stripe on the back of it. I'll make sure to cover up my number here since we're webcasting. That magnetic stripe is the same technology used in cassette tapes. That's how old it is. Now, of course, we're in the process of migrating in the card world to these chips in cards, the so-called EMV chips, which will help make these plastic cards more safe and secure. But truly, the future of payments is one of ubiquity of technology. And what that means is for consumers who have come to appreciate the value of electronic payments. Consumers in the United States carry more than 1 billion, with a B, debit and credit cards in their wallets. Those transactions are rapidly migrating, as are many of our other activities in our daily lives, to the mobile world. And the advent of mobile payments and the embracing of mobile payments and new technology by the payments industry creates enormous opportunities for merchants. Because mobile payments, like all forms of electronic payments, are safe, secure, reliable, and rewarding. And also, in some cases, they're kind of fun. This is my Pebble smartwatch. I don't know if you can see that on there. That's my Starbucks card on my Pebble smartwatch. Now, why would I want to pay for a cup of coffee with my watch? Because it's kind of cool. But it's also, let's not leave that aside. But it's also, again, for the consumer and the merchant, it's safe, reliable, and rewarding. Starbucks, as it happens today, is the single largest provider of mobile payments in the country. Why have they been so successful? Because it's a closed-loop system and it's very easy for them. They control their own issuing of the Starbucks card and the acceptance of the card. You can't use the Starbucks card anywhere other than at Starbucks. But it also means, as a consumer, that I can tie my Starbucks card to my credit card, my preferred method of payment, or to my PayPal account, which is how my Starbucks card is funded. and I can use whatever device I happen to like carrying with me or putting on my wrist in order to pay. It also keeps track of my Starbucks stars, so I don't have to carry that plastic card around. The migration to mobile payments is about, for retailers, enabling whatever it is that their customers want to have enabled on their behalf, while still maintaining the safety, security, and reliability of the electronic payments network. Now, to be clear, mobile payments are a very small part of the overall transaction volume in the United States today. I like to think of mobile payments as an area with very high interest but very low activity at this stage. Just to put it in perspective, I mentioned that $4.9 trillion figure as the payments processed in the U.S. last year. Depending on what estimate you go by, somewhere around $200 billion of that was mobile payment enabled. And surveys show that consumers that are using mobile payments, it's in this high single-digit percentage right now in the U.S., those consumers who have actually tried it. But again, we see the migration from that magnetic stripe to the mobile device. And if you think about adoption in other areas where consumers have used their mobile device for commerce, for example, it takes a very long time to change ingrained habits, but we're getting there. And we're very excited about the opportunities that mobile payments present. You know, the commercial use restriction was lifted on the internet in 1995, so just 19 years ago. And 19 years later, if you look at commerce in the U.S., the percentage of commerce that takes place online just passed the 10% mark last year for the first point. 90% of commerce is still in brick-and-mortar stores, nearly 19 years after the commercial use restriction was lifted on the internet and online commerce became possible. Now, that number is going to continue to grow, but that shows you the growth curve we're on. The last thought I want to leave you with about the philosophical approach to new technology and mobile payments is this. When you think about the regulatory landscape and the need for involvement of government in mobile payments, I do think it's very important to realize conceptually that mobile payments are really a new means of initiating a payments transaction. It is not a new payments transaction. So whether the example I give you is my watch or my phone or the plastic card or any of the other great new technologies that are out there and that you'll hear about today on this panel, all of the protections for consumers, all of the fraud, zero liability protection that consumers know and appreciate, the reason they use electronic payments, all of that is still there. Because this new means of initiating the transaction that we're talking about and that we're so excited about is truly just a replacement of form factor. Instead of swiping a card or in the chip world dipping a card, I'm tapping my phone in the case of ISIS, or I'm typing my phone number in at Home Depot in the case of PayPal, or I'm holding up my watch in the case of Starbucks, or Level Up, a great Boston-based company that's using 3D barcodes on phones. All of these are means of initiating a transaction, but all of the very important consumer protections, all of the very important fraud protections, anti-money laundering protections, all of the things that are so important to all of you are still in place. Because at the end of the day, the transaction that you're initiating with that new form factor is still tied to those legacy, and I don't mean that pejoratively, but the legacy financial rails that you have all done so much work to protect on behalf of consumers and merchants. So in closing, ETA, as the trade association of the payments industry, is very excited to help our industry move forward, to continue to provide unparalleled service to merchants, to provide consumers the opportunities they need and desire in order to pay in the form that suits their needs best. And we look forward to having the opportunity for continued dialogue with all of you through the group here, through the task force, and through your individual state and Commonwealth operations to make sure that we do everything we can to help you understand why technology is so beneficial in the payments industry. So thank you very much for the opportunity to be here today, Mr. Chairman.
Thank you, Mr. Axman. Mr. Goodwin?
Again, thank you for the opportunity to appear before you today. My name is Lou Goodwin. I'm the President and Chief Executive Officer of Green Dot Bank, and I'm here to discuss with you innovations in retail payments. Green Dot Corporation is a bank holding company, and it fully owns Green Dot Bank. which is a state member bank located in Provo, Utah. And we are regulated by the Board of Governors of the Federal Reserve and the State of Utah Department of Financial Institutions. Our core product is the Green Dot card, which is a general-purpose, reloadable, prepaid card. This card can be used to make purchases, pay bills, get cash, and to access funds, just like any other traditional MasterCard or Visa debit card. Today, Green Dot is the largest company in its space. We have over 600 domestic employees in Pasadena, California, Palo Alto, California, Bentonville, Arkansas, and Provo, Utah. And Green Dot's sole mission is to invent personal banking for the masses. And our sole focus is on low, fair cost, and easy-to-use banking services for the low to moderate income Americans. Our card features no penalty fees and no overdraft fees ever. And also includes short and clear, simple disclosures. Green Dot's card and reload services provide the consumer with 90,000 retail locations of which they can put money onto their cards, and we can also load money onto the cards through online and via leading store apps. And each year, Green Dot opens approximately 5 million FDIC-insured deposit accounts. And most of those people are either previously unbanked or underbanked by traditional banks. All of Green Dot accounts are fully FDIC insured and come with Reg E protections. We require customer identification just like any other bank would, and our accounts are compliant with the U.S. Patriot Act. Direct deposit is free, and the funds are available immediately. Registering and using a Green Dot card does not affect your credit score. In addition, there are no purchase fees when you purchase a card online. And Green Dot products adhere to the customer covenant of clear disclosures, no minimum balances, and no penalty fees ever. Green Dot supports the application of consumer protections for general purpose reloadable cards, and also including guaranteeing deposit insurance for the customer's accounts and full Reg E protection, crediting funds to the account in a reasonable time and restricting abusive fees, and ensuring customers access to necessary account information when the customer needs it. And then Green Dot Corporation also operates the Green Dot Network, which offers the consumer the ability to add cash at retail locations to prepaid cards, and not only including Green Dot cards, but over 100+ programs that are prepaid that we support through our network. Earlier this year, Green Dot announced a new way for customers to add cash to their prepaid card. It is called Reload at the Register. Currently, our customers purchase a paper chit, which is also known as a money pack, and they add their cash to their reloadable cards at retail location. As the name implies, Reload at the Register lets the prepaid consumer simply go to the register at any participating retailer to conduct their cash reload transactions. The cashier collects the money from the consumer, and he or she wishes to and presents the card that he or she wishes to reload, and pays the reload fee and swipes the customer's card at the point of sale terminal. The retailer's terminal is connected to Green Dot's data processing center, where Green Dot is able to see the transaction in real time, and the real-time transaction method allows Green Dot to readily load reloadable funds onto the customer's account without any further action from the customer. Green Dot's Reload at the Register service allows them to enjoy faster, easier, and more intuitive reload transactions without the fuss of having an intermediary step of transferring from the paper chit. We expect the new reload experience to be fully implemented with Green Dot retailers as of the end of 2014. Green Dot is also a leader in the mobile banking space with our GoBank mobile DDA account offering. GoBank is the first account designed from scratch to be opened and used on a mobile device. Each GoBank account includes a checking account that is linked to a Visa debit card and an account called a Money Vault, which is designed for an easy way for GoBank customers to save money. GoBank features a consumer-friendly pricing model with no overdraft or penalty fees and no minimum balances. We offer over 42,000 free ATMs, and they are easily located through the GoBank app. And we offer a very friendly user interface, budgeting tools, P2P payments, mobile bill pay, and paper check payments, remote deposit capture, and free cash deposits at participating retailers. It is a fast, fair, and friendly consumer experience, and all accessed through a mobile device or online or via a tablet. Again, thank you for allowing me to appear today, and I look forward to answering any questions you may have. Thank you.
Thank you very much, Ms. Goodwin. Mr. Muller?
Thank you, Mr. Chairman, and thank you to the members of the task force for the opportunity to appear and represent PayPal at this panel on retail payments innovation. I think I'm the only representative of a company that is regulated by each one of your states. So my apologies in advance if some of what I'm about to tell you is redundant to you. But the fact that PayPal has been invited to a panel on retail payments innovation is one demonstration of the evolution of PayPal over our now 14 plus years of operation, from a company that started as a mainly person-to-person payment system to a company that is now focused really on commercial payments, and that is the bread and butter of what we do, especially for small and medium online businesses. So we've had the good fortune to grow now to more than 7,000 employees in the U.S., with customer service and operations centers in Nebraska and Arizona, and technology development centers in Austin, Texas, in Scottsdale, Arizona, and in Boston. And in my plug to the host, and my thanks to the host, I would also want to mention that just in last December, we acquired a great local Chicago startup that had done some really innovative things and continues to do innovative things in enabling payments for online websites and for mobile developers and merchants who make use of mobile applications, a company called Braintree, based here in Chicago, and its subsidiary Venmo, based in New York. So I think we're covering the majority of your states. The PayPal model is built on top of the so-called legacy payment systems that you heard from in the first panel, primarily cards and ACH. So sometimes referred to as disintermediation, but I think more accurately, we're just adding an additional intermediary to legacy payment rails, and we're paying a fee. Essentially, for every transaction, the money comes in from either card or bank, and then typically moves out through the ACH system, and we're paying standard fees to our bank processors on each of those transactions. So why is it that PayPal has a role as an additional intermediary? Typically, you wouldn't expect intermediaries to be added if they're not creating some value or serving some role. So there are a number of reasons why small and medium businesses in particular choose to accept PayPal as one of their payment methods, or sometimes their only online acceptance method. Typically a combination of factors, depending on the merchant's own business model. One of them is cost, and we certainly aim to set our pricing structure so that the cost is lower than standard card acceptance. Our fee structure is based on standard card processing fee structure, where we charge the receiver and not the sender, and we charge the receiver, the seller, a fee that is a combination of a percentage-based fee plus a fixed fee, and we we strive to keep that percentage-based fee lower than what they could otherwise get for standard credit card processing. Another reason why a merchant might choose PayPal is what we and others sometimes refer to as the push model rather than the pull model. So in standard card processing, the merchant is pulling information and funds from the consumer. And to do that, the merchant has to receive the consumer's financial information, either card or bank account. With PayPal as an intermediary, the consumer is pushing the funds through PayPal and never has to share their financial information with the merchant. For many consumers dealing especially with a small business for the first time, they prefer that as an added element of security. And as a result, the merchants prefer that as something that's more likely to bring them new customers and to convert those visitors to their website or to their mobile application into buyers. And then another reason why merchants choose to accept PayPal is international exposure. And even the smallest businesses now through the internet are able to participate in international trade and export. And if they're selling goods that have appeal outside the U.S., in many cases they find that in some countries not as many consumers have a credit card, or they may not have a credit card that works internationally. And PayPal deals with those issues for them. We now accept buyers in 193 different countries, so we're helping those merchants to access international markets. So turning to specifically payments innovation, certainly we see consumer shopping behavior changing and retailer behavior changing, where the lines are blurring between traditional electronic commerce and physical world point-of-sale retail, and largely through the mobile device and the portability of the mobile device. And so we are following that trend, and certainly payments innovation in this area will be driven by retailers and marketplaces and consumers, and payment services will only be a partner in helping make that innovation happen. We're not going to be the ones initiating the change. It has to come from the retailers and the consumers. But certainly the mobile device has great potential to add some new features and some value to payments at the point of sale. As we've heard, it also have a fairly high hurdle to overcome because the existing payment systems of card and cash are well established. Consumers know them and understand them. Acceptance is widespread. So all the companies in this space have to provide extra value, and that's what we are all grappling with and trying to find the right mix of convenience and extra value in the form of perhaps loyalty or marketing programs. And then for some, perhaps the aspect of coolness that Jason mentioned, but certainly coolness by itself will not be enough to attract consumers to change their ingrained behavior. So all of us who are participating in these changes at the point of sale are looking for that combination of a new convenience and new value to the customer at the point of sale. At the same time, it's important to emphasize our core business is still very much the online and mobile merchant doing business, not necessarily with their customers face-to-face in person, but over the internet, over the mobile device. So we are regulated, as I mentioned, in all of your states and all of the other states that regulate payments as a money transmitter. So that's 48 states in total, plus the District of Columbia and Puerto Rico and Virgin Islands. So I can speak to the point that certainly it takes work, but it is something that new companies in this area can achieve and can go through the licensing process and make it through. Again, certainly takes work, it takes effort, as you would expect, but at the same time, it's not impossible, and we do see every day new investment in competitors to PayPal and others. So it is a growing arena. And with that, I'll conclude my remarks, and thank you again for the opportunity.
Thank you, Mr. Miller. Mr. White?
Thank you, Chairman Cotney. Thanks to the CSB as well for the invitation to appear before this body, and thanks to this task force in particular for your demonstrated leadership in this area. It's obvious that there are vast changes underway in the area of retail payments, and in particular in my space in mobile payments. But that innovation is happening often in forums or discussed in forums where people are using very common terms, generic terms that don't always belie the complexity and the diversity of technology's business models and implications for consumers under there. So thank you for digging deeper to understand the implications and the differences between the solutions that are being brought to bear and taking that into consideration as you do your jobs. So from a perspective of ISIS, what I would hope to do today is talk to you a little bit about who we are, not so much as a commercial, but to use ISIS as one lens by which you can evaluate an emerging payments play in the market. We were formed in 2010, and as you may know, we are a joint venture between AT&T, Verizon, and T-Mobile. And Chairman Cotney, I apologize for hitting you with the TLA, the three-letter acronym on my title there. MNO stands for Mobile Network Operator, hence wireless carriers. But we are an open platform. There are certain things that we are not that people don't always understand, given sort of the nascent state of our development. We're not an issuer. We're not a payment network, and we're not a money transmitter. We are indeed a platform. So our platform is there to connect financial institutions with their existing customers and help facilitate commerce between the consumer, the merchant, and those FIs. So the platform that we provide for those parties allows for contactless payments using the mobile device. We did have two different pilots that you may have heard about last year in Salt Lake City and in Austin that were quite successful, gave us an opportunity to test and run our solutions, but we did launch commercially in November of this year. We had an announcement yesterday through a blog post that gave some insight to our current trajectory. So we are moving very aggressively to scale the business. We reported yesterday that our average addition of wallets per day is about 20,000 per day and trending upward. So we're very pleased with that performance. We think that that's going to continue and grow. But it also kind of underscores some of the things that color our decisions in the marketplace as ISIS. Being born of three large telecommunications companies, scale is something that's very important to us. And when you consider the things that ISIS does in the marketplace versus others, we are focused on driving scale because we believe that scale or innovation without scale is simply a science experiment. And we want to make sure that as we scale, we do it appropriately so we don't trip ourselves up, but also unduly cause harm to the rest of this industry as it's coming up. So to talk about our principles a little bit, these underscore everything that we do as ISIS. As a platform, we are centered around this idea of choice. We are agnostic in the way that we approach our business. We are agnostic to devices, to wireless operators, to operating systems, to payment types, payment networks, and financial institutions, whether they be existing institutions or perhaps emerging institutions that will be providing payment services in the future. Privacy, obviously, is a very big watchword for us. The way we have architected our solution, we are very careful to honor the privacy of consumer data. We are not, as some would have presumed along the way, part of the transaction flow. We do not see transaction data. We do not harvest transaction data. We are simply a mechanism by which a consumer can select a payment device that was issued by a financial institution and present that at a point of sale. And I've got a slide that will talk about some of the ecosystem roles later that discuss that. But we are really a facility to allow for the presentment of that device that credential at point of sale. And then once that is ingested by the point of sale, the same type of transaction settling and clearing that happens today with a traditional magstripe card happens in a very similar manner that it does today. From a security perspective, I'll tell you, coming out of the telecommunications world, I was with Singular and then AT&T before coming to ISIS. I've done quite a few mobile payments and mobile banking trials and launched some commercial services. Without fail, whenever we have done a trial around mobile payments, the first thing that comes out of a consumer's mouth is, wow, that's really cool. The second thing that comes out of their mouth is, oh no, what if I lose my phone? Security is top of mind for everyone in this industry, whether it's regulators, service providers, or consumers. The good thing is that for mobile, I think we have a very good story to tell at ISIS. I believe we certainly do. But it's a story that must be told. From our perspective, the way our solution is architected, we have a number of inherent benefits that are brought to bear through the mobile technology, one of which is that all of our wallets are PIN code protected. So to use and access those payment credentials, you have to first enter a PIN. Secondly, we offer a one-call or one-click freeze. If a consumer were to lose or misplace their phone or have it stolen, a single call or click on a website can freeze that wallet until it's found, or if they need to replace it, then we can establish a new wallet for them. We also, through our network of customers on the institutional side, financial institutions, can provide an early warning system as well. So we have the ability at that one call or click not only to freeze that wallet, but to notify the financial institutions who hold credentials in that consumer's wallets, so they can undertake whatever fraud mitigation and other procedures that they feel are necessary to protect that consumer and their interest as well. The other aspects around security for us that I think are unique is that today we offer dynamic CVV, so the card verification value that's associated with each transaction changes every time you make a payment using an ISIS wallet. So that makes it obviously much harder for someone to intercept and counterfeit or clone a counterfeit of that account. So those are all in place today. In simplicity, this is something we're always focused on. We endeavor to do better every single day on this. Mobile payments is not a common concept to a lot of consumers. As we implement this and we try to take into consideration all of those security considerations, all of the business requirements of the partners and brands that are associated with it, we have to be on the front line with the consumer and make sure that it's easy to understand and easy to use. So looking at the evolution here that we're pursuing, it's been mentioned several times today. I know Jason had made a comment or two around the age of magstripe technology. It's clear with the recent data breaches, the push for EMV, and also the accelerated push for tokenization that magstripe has really run its course. But magstripe served us well for many decades, and it's also set the bar for what consumer perceptions around ease of use and acceptance are. Its acceptance footprint is extremely wide, it's very easy to understand, and it's highly reliable. So as we transition into mobile, those are table stakes. But what the mobile brings to the table that wasn't there for magstripe are a lot of attributes that can be used by any number of service providers. But the fundamental ones are that you essentially have a computing platform in your hand with an interactive data network, a graphical user interface, and an ever-present and often trusted form factor. So that's the promise that it brings. Now, how people actually utilize those to deliver services, you will see a myriad of ways, and I'll tell you a little bit about ours now. For us, we use a technology known as near-field communication to effect communication from the device to the point of sale. It's also known as NFC. NFC in and of itself is a radio technology, not too dissimilar from Bluetooth or Wi-Fi. It's really short range, 4 to 6 centimeters is the broadcast distance for successful transmission, and it's good for bursty transmission, so you won't be streaming a lot of music over NFC. But it actually makes it very convenient and adds to the security profile of mobile payments when you're using a short-range technology like that. With NFC, if we'd had this panel 2 or 3 years ago, it would have been a forthcoming technology. Today, you'd be hard-pressed to find an Android device that's being sold by the major carriers that does not have NFC in it. And of those, with our partner carriers, the vast majority of those are what we deem ISIS-ready. They are companioned with not only all the certifications that come from us, from EMVCo, from the device manufacturers and the wireless carriers, but it also comes with the use of a secure element. The secure element is a smart chip, a hardware-based solution in which all the secure credentials are stored, and that'll differentiate us from others who use cloud storage or software storage on the device. And we're based on the Global Platform Standard, which is an international standards body that is focused on the provisioning and maintenance of credentials and smart cards. And we're also compliant with EMV. When you think about the multi-sided market that exists when you're trying to innovate around payments, obviously the merchant's acceptance has to be a major component of that. Today, we're seeing about 25 of the top 100 merchants who have already deployed or are in the process of deploying contactless technology. That's important when you consider the footprint of retail payments today for MagStripe. We're nowhere near that, but the concentration of contactless is in very important places. From our wallet perspective, that's how a consumer experiences our product. We support payment cards, loyalty cards, and offers, and we are accepted by quite a few of the merchants that are out there today, in the hundreds of thousands, moving towards that 1 million mark. From an ecosystem perspective, I touched on this a bit before. I would encourage you to think about us in our current form as evolutionary and not revolutionary. We take advantage of the infrastructure that is in place today for issuers. They are still the issuers of these credentials. They own that consumer relationship, and all of the regulations and consumer protections that are associated with their products still persist today. For merchants, they are playing the same role that they always have. They have a different form factor to accept payment and offers and loyalty from, but their relationship between the issuers, the consumer, and the payment networks is unaffected. So fostering the mobile payments, part of the focus that your organizations have is trying to understand how to protect consumers. I would just underscore in sort of closing remarks here that stability is really important for innovation. In our case, we are in the role that we play. We are taking advantage of the regulations and consumer protections that exist today. So as was mentioned by Jason, all of those same protections around fraud liability exist because this is just another form of an existing payment association card. And I would ask that as you look at new facets of mobile and you consider new regulations around that, to think carefully around decomposing the different solutions that are in the marketplace, because although we use a lot of the same terminology, we do approach it very differently. And the potential for unintended consequences is real if a sledgehammer approach is taken versus more of a surgical strike. You know, a federal example to throw out there that caught us in our industry was the Durbin Amendment. All right, that was not really focused on mobile or innovation. It was really focused on interchange around debit cards, but it introduced a number of wrinkles that have caused a lot of rethinking and rework, in particular the dual routing for debit cards. That capability did not exist and is just now starting to exist for contactless payments, whether it be mobile or card. And that's driven a lot of delays of getting support for debit cards and a lot of additional investment. So I would just use that as one test case, but I'm sure there are others that we should be mindful of going forward. Other than that, I appreciate, again, the opportunity to be with you and look forward to answering your questions.
Thank you, Mr. White. Let's start with Commissioner Leary from Utah.
Thank you, Mr. Chairman. Thank you to the members of the panel who have come before us today. I'd like to follow up a little more with Mr. White's comment, but apply really the question to all three that have a product or a service they're offering. The high-level question is, what are your inhibitors to further adoption of your product or service? What slows you down? And subset of what Mr. White has always addressed, are there laws and rules that are prohibiting your further adoption or your customers' further adoption of your technology? Love an answer from all three of you.
Sure, I'll be happy to take the first stab at that. You know, for us, the major inhibitors aren't regulatory at this point. They're just really the market dynamics that are in play. We do, under our current technology focus on NFC, require that merchants have a contactless acceptance capability. That is growing. We'd like it to grow faster if it could, but uncertainty in that area of the market does inhibit us a bit. Certainly with the discussions around rolling out EMVCO and the acceptance or resistance to that, can delay the deployment of new point-of-sale readers that would include, in most cases, NFC. From a consumer perspective, we haven't seen it as an inhibitor yet. We've seen quite a bit of enthusiasm around mobile payments, and in particular our solution that we've put out there. But we are mindful and somewhat wary of other services that may come up that could have an incident and undermine the confidence. So we're very diligent, and we encourage our competitors to be very diligent in the protection of consumer data and to avoid any unfortunate instances that could taint the adoption of mobile across the industry.
So I would agree that the main inhibitors at this point are not regulation, and it is figuring out that complex mix of merchant acceptance and consumer choice, choosing new way to pay over something they already know, and in most cases that they like and have grown used to. Specifically on the regulatory side, I would say perhaps there are two things worth noting. One is that there's a role, I think, for regulatory agencies to play along with the industry and others in just spreading the word or educating the public that the consumer protections that apply, say, to a credit card continue to apply if you pay with the credit card as your funding method through a mobile phone, the same way that they have applied if you use the credit card to pay online or if you use a credit card by swiping it at a machine. So I think again, the industry certainly has to take the lead, and we're trying, but there is a role for regulators to play as well. And then I'd say one last thing, more at the federal level than at the state level, some of the disclosure requirements, as you would expect, were not written for a mobile first world. And so the regulators are moving, they recognize that and are moving to adapt, but there's still a ways to go in some of the disclosure requirements that worked well in the physical world or the world of mailing paper or even putting a statement on a website don't work as well on a mobile device.
Yes, thanks for the question, Commissioner Leary. I think the largest inhibitor to us in the underbanked and underserved space is that our consumers don't know who to trust. They may have had experiences with banks before, and they had extremely bad experiences where they were either fired by their bank or they fired their bank, if you will, because of fees that they just could not absorb. So a lot of what we have to do is help the consumer understand the products through clear disclosures, through fee boxes that can clearly let the consumer understand how they could use the product and how they could benefit from using the product and not being caught by fees that are unclear or underdisclosed. So I think that is what we need to do is to continue to educate the consumer and make sure that we provide clear disclosures so the consumer can understand what they're buying before they buy it.
Director Jarvis. Thank you, Mr. Chair. I think I'd like to build on what my friend from Utah was asking you about, and I should probably start with Jason. First of all, I gave up wearing a watch many years ago, and my daughter does not think I'm cool at all, so I may talk to you afterwards. But it's truly amazing the amount of innovation in this. I've been a regulator for a long time, and it's hard to keep up for us, really it is. So I'd like a little counsel from you. You know, the market picks winners and losers. Regulators don't have that luxury. We have to take it as they come. But we also don't want to spend valuable resources and limited resources dealing with a technology that may not make it. So what advice would you have for us as we continue our consumer protection role, our safety and soundness roles? What advice would you have for a regulator in terms of fundamental guidelines for the future for the technologies that are not represented at the table, but maybe here next year?
Well, that's a great question, Director Jarvis, and I appreciate it. And obviously, being in Washington State, you have a number of companies under your purview, Starbucks being one of them, Amazon being another one that's very active in the payments industry. So I can certainly understand why the question arises, and it's a great question about the approach to technology. I think the fundamental premise is, and this is why I focused in my opening remarks, about thinking about these changes in technology as a new means of initiating a payments transaction as opposed to a new payments transaction. That allows you as a regulator to focus on the entities that you have traditionally interacted with. And I'll go back to the example of Starbucks. Starbucks has somewhere behind them a payment processor. And a payment processor has to be, by credit card network rules, attached to a financial institution. So J.P. Morgan Chase, which has a branch, an operation called Chase Payment Tech, which is an ETA member, actually processes the transactions. And obviously, as a state banking regulator, there are some banks that are under your purview and some that aren't. But at the end of the day, it is the financial institution that bears responsibility for compliance with state and federal regulations and laws related to the actual movement of money. So I think, and I love the direction of your question, because what it suggests is that the reflex of the state regulator is not necessarily, well, there's a new technology, somebody's making a watch, let's go hold them responsible for moving money around. Obviously, Pebble or whoever else is making a watch should have no responsibility for people's money because they're not actually doing it. What they're doing is using e-ink technology to generate a 2D barcode that then goes back and is tied eventually to my PayPal account, and my PayPal account is tied to a credit card. So there is a traditional financial institution involved in that transaction, and I think you're right. Philosophically, the approach should be, let's look to the entity that has been held responsible for and will continue to be held responsible for those consumer protections, protecting consumers' money, and still will be involved in that transaction chain even as we move to a new means of initiating that transaction.
If I could add, so I think the question really lends itself to a framework that is something that really your state's already familiar with, which is in the credit card processing and acquiring world. And as Jason suggested, to a large extent, it's a story of follow the money. There are already merchant acquiring companies and payment gateway companies today that help merchants process card transactions, that are handling data and helping transactions get completed, but are not handling money, and today are not regulated, and that system has worked, at least in my view, quite well for a long time. For companies that are handling money in some form, like PayPal, with the opportunity that we have for consumers and merchants to carry a balance, really the essence is the 100% liquidity requirement that is part of all your state's money transmission law, and that goes a long way towards, I think, giving you some comfort about not having to pick winners and losers, as you suggested, because even if a company winds up not succeeding in business, as long as they are maintaining the right liquidity, their customers are not going to be harmed. It's only unfortunately, their stockholders and employees. But the 100% liquidity requirement gives you some comfort, I think, of not having to pick winners and losers.
Yeah, I would agree with both Jason and John's comments. I might just add, though, that with respect to technology, the strategy that I might employ is to think of technology as an ingredient in a recipe and not the recipe itself. In most cases, now again, I'll use what I'm familiar with, ISIS, as an example. We use near-field communication to affect that communication. We could use Bluetooth, we could use barcodes, we could use Wi-Fi, any number of different things. But at the end of the day, the function that we provide, the functions that's being provided by the other ecosystem partners, and the flows of data and money would be exactly the same.
Thank you. Commissioner Breakspear from Florida.
Thank you, Mr. Chairman. When you talk about mobile, it just reminds me that in the first quarter of this year, Florida had 26 million people come and visit the state, so they're highly mobile. We also had 1 week in February, when we were the only state without snow on the ground. And with that, I'll aim this a little bit at PayPal, but I think it broadly impacts all of you. In PayPal, they talk about observe, orient, decide, and act, which implies some form of feedback loop that you have built into your various systems. My broad question is, while you have this real-time feedback, have you contemplated at all sharing information on problems, systems failures, red flags, and the like with your regulators? And while this is aimed at PayPal because you sort of put it out there, I think I'd like to hear from the others as well. Broadly, do you see this as an opportunity to interact, and have you even thought about it?
So we have thought about it. I'd say maybe not enough with the regulators and with your agencies. Certainly today, we mainly try to do that through communication with our banking partners, both the ones that provide service to us directly as a processor of a card or an ACH transaction, and then we have signed up for the federal program that allows for sharing to prevent money laundering and terrorist financing. So we do try to participate in those ways, and certainly would welcome suggestions on how we can do better with your agencies, because we certainly recognize that it's a complicated ecosystem, and we want to play our part, and certainly would welcome the information coming in two directions. Certainly there are cases where, for example, a card issuing bank may know something about a card being bad or potentially compromised, and we would love to find a way to know about that as well before someone tries to use that card on PayPal.
Does anyone else want to address the question of sharing?
I just want to make sure I understood the question correctly. You're asking about sharing of information with bodies such as yourselves, or you're talking about in real time related to transactions? I wasn't clear on that.
Really sharing information with bodies such as ourselves.
Oh, sure, yeah. So both Lou and John and I all participate on the Federal Reserve Mobile Payments Industry Working Group, which is a body that's been active now for, I think, 3 years. That's one forum that we all get together in a cross-industry fashion. That is with the research side of the Fed, but we do have periodic meetings, as we had, I guess it was last week. Chairman Cotney was in attendance to that as well, where we do meet with regulators periodically to talk through issues, share thoughts, and understand concerns and needed actions. We, as I'm sure the other my esteemed colleagues here and their companies as well, are also very active in direct outreach to various regulators and are eager to respond to any questions that come up. I know I've met several of the folks on the panel in the past to do just that, to kind of share our perspective and thoughts on the marketplace.
And I also agree with the others' comments. I mean, to be able to share between entities a known fraud or a known scam would be very helpful in any way we can make that stronger to make sure that while the consumer is protected, that also we are keeping bad elements out of the system. I would encourage that.
And the payments industry obviously has a very strong interest in rooting out fraud wherever it exists, because the way, as everyone on this panel knows, the credit and debit card industries operate, consumers have zero liability for fraud, and it's actually the card issuers that have to take responsibility in the first instance and protect consumers from any fraud. So any concerns or questions you have about steps and measures that our industry is taking to continue to protect consumers against any fraudulent activities, and also to just understand how the technology works to continue doing that. We are always delighted to have the opportunity through this forum or more directly to provide the kind of information that will ensure your satisfaction that we're doing what's necessary to protect consumer interests.
Thank you. Commissioner Gonzalez?
Thank you, Mr. Chairman, and thanks again to this panel for being here and sharing your thoughts with us. On the first panel today, we talked about security. We'll continue talking about that here. And we talked about it with respect to modernization and the aim of increasing speed. I would like to ask ISIS and PayPal to talk about your systems and products in the context of security and how you would compare that to the traditional payment systems. Do you have features that the traditional payment systems do not include? And we'll start with my fellow University of Tennessee grad, Mr. White.
Go Vols.
Go Vols.
Yeah, thank you for the question. Yes, we do bring to bear certain additional security measures that aren't available in other form factors. But as we mentioned before, obviously all the fraud protections around the payment product are the same ones that are there. For us, and I think generally for mobile, the advantage here is that you have more authentication factors than you've had in the past, right? The ability to not only use a PIN on a device, but to verify the equipment is the right equipment that's associated with an account. There's things you can do around those. But principally what we talk about is the PIN protection first and foremost. As I mentioned in the opening remarks, for the ISIS wallet to operate, you have to enter a PIN into it. It will not function, will not communicate with a terminal. The credentials that are issued by the banks and that are stored on that smart chip are highly resistant to tampering. They are, if you were able to hack them through some supercomputer you have in your basement and get that information, it would not be easily usable elsewhere. As we mentioned, there's a dynamic CVV component to that, which means that you have to crack that as well and figure out how to do it. The other inherent benefit, I think, to the architecture we have where these credentials are actually stored on the device and not in the cloud is that we're not a very interesting hacking target. ISIS does not retain any of that information in any of our servers or systems. They transit our systems when they're being provisioned, but after that, they are gone. We do not retain the keys that allow access to that information once it's inside a secure element. Those keys are turned over to the issuer, and then they're rotated by that issuer, so we have no access to them. Contrast that to cloud-based storage, and I'm not picking on cloud. Cloud's got a lot of great advantages, but you've got a big concentration of information in one server site or one central location. That seems to be much more attractive if you're organized crime, for example, versus trying to hack each and every individual's device that's out there.
So a couple of things I would mention. One I mentioned during my presentation, the contrast between the push system and a pull system. And by using a push system, the fact that each merchant who accepts PayPal is not getting your card number or your bank account number. So PayPal certainly has to keep it safe, but the number is not being spread around throughout the world, the commercial world. And we think that's an important security element. Then behind that, PayPal really, and probably every payment company to some degree, is fundamentally a risk and fraud management company. And so it's a matter of building models over time that get continually better. So, it's never good enough, and we always have to keep improving, but certainly our losses from fraud today are much lower than they were when we started 10 or 11 years ago, and we have to continue working on that. So even in the case, of course, where we do still rely primarily on username and password to access an account, our system is looking for much more than that to actually process a transaction. So not just the username and password, but also how new is the customer, what is their IP address, what are they buying, all these things that are being modeled. And then I'd say the other element worth noting, and it is not really different than the card systems, but in conjunction with them, is of course the card systems, Visa and MasterCard particularly, have done a lot to publicize their zero liability program for unauthorized transactions. We have the same system, so even though federal consumer protection would allow us to impose some amount of loss on the consumer for unauthorized transaction, we don't use that, and we have the same zero liability, and we extend it to bank-funded transactions through PayPal, not just card-funded. So that's an important element as well of helping the consumer feel secure.
Thank you. Commissioner Cooper, do you have
Well, just a short question, and John, this is to you. You know, one of the things that we try to do, we're obviously in the regulation business, but we're also trying to reduce burden if we can. So in a company such as yours that has licenses all over the country, do you think the usage of the NMLS system is beneficial? Are we headed in the right direction in that regard? And that's not a leading question, right?
The short answer is yes. We welcome any drive towards more consistency and uniformity in state regulation, both in registrations and reporting and examination. And the NMLS, or using the mortgage licensing infrastructure, is helpful in that regard. Of course, as entrepreneurs, we were always somewhat impatient, and progress is never fast enough. But it's certainly the right direction to keep working on and keep going in.
Thank you.
Commissioner Hagler?
Thank you, Chairman. Thank you again for being here to visit with us today. Kind of as a follow-up to Commissioner Gonzalez's question, there was a retailer that really made the news around Christmas time with a significant breach. And so my general question to each of you would be the products and services that you provide. If a customer was using your technology and made the payment in the store, would that have made any difference in terms of folks losing their data through that breach?
Sure, I'll lead off on that one. I believe I've heard of the breach that you're speaking of. I'll come back to the dynamic CVV, right? I mean, I think that's the principal protection that would have been very valuable in that instance. So if for whatever reason they were able to abscond with the card number, and if they were to use the CVV that was used, they would have no ability to replicate that card, because the next time it was used, the issuing bank would recognize that was a previously used CVV, or would recognize that whatever CVV that was placed next in line was not the predicted value, and they would have been able to detect that as a fraudulent transaction.
Yeah, if I could, Commissioner, just from the perspective of the payments industry broadly, obviously these retailer breaches are enormously damaging to consumer confidence in the protections afforded the infrastructure. So we all share an interest in making sure that these kind of things don't happen again. I think in the case of the large retailer breaches that happened over the holiday period, we now know a little bit of information about how those breaches happened, and they were actually, as we now know, breaches of the retailer's own systems. Right. So the means by which the transaction was initiated, whether it was a magstripe card or a chip card or a phone or a watch or whatever it was, actually would not have prevented the breach, because the breach was someone essentially stealing network access credentials, in the case of one large retailer, from an air conditioning contractor, and then using those credentials to get into the systems. But what is important is, and you've heard a lot about this technology here on the panel today, things like tokenization, where, as Mr. White mentioned, you replace the transmission of card data with an actual one-time use token that, even if it's intercepted, wouldn't make any sense. The EMV chip in the cards, which makes it impossible to counterfeit a card, to use the fruits of your criminal activity. End-to-end encryption, which ensures that every touch point into the payment systems is encrypted as opposed to just some of them. All those things that we're deploying out there in the marketplace will help further secure the systems. And I do think the move to new payments technology, like you've heard today, will go a long way to help those technologies move forward.
Thank you.
And thank you, Jason. That was largely my point, is that I know the MAG card is getting a rough rap in this meeting today, but I'm not sure that that was the end-all problem in that very high-profile breach.
Right.
Secretary Flores.
Thank you, Mr. Chairman. I do have a quick question, and it goes to a lot of the security issues and just the way that the regulators work with all of you. Historically, in the non-depository space, and particularly in your areas, the regulators, the examiners have been using more of a compliance approach as opposed to a safety and soundness approach, which really looks more at prudential regulatory analysis, which looks at risk. What's your perspective as we're seeing new technologies, new systems, and I got to tell you, I get really concerned when I hear the things impossible or very hard, because nothing's impossible. The reality is all of these individuals who are out there trying to do harm are trying to figure out right now how to crack into your respective systems. So the vulnerability and the risk is always there. As examiners, what can we do better to work with you to apply and better understand and focus on this risk? And is the compliance model better or not? And should we be looking at more of a safety and soundness approach going forward?
No, that's a great question, Commissioner Flores, and I think the states have always been such a great incubator of new innovation, and you're always the first people that see and try to regulate it even before it gets to the federal regulators in a lot of way. I do believe that the risk-based approach has to be the element that we and you employ together, and to get away and evolve away from a checklist that everything is as important as it was 10 years ago. I think that there are definitely new technologies, there's new approaches that if you can see that and see how we manage that either internally or with the vendors that we deal with, and that you can really understand not just the technology but the flow and the protections, I think it'll do all of us a lot of good.
Yes, so I would certainly echo that, and I think already that there is a fair amount of that approach of moving away from a strict, just a check-the-box checklist, to more of a risk-based overall safety and soundness approach in looking at information security. And as you say, information security is never ending, because the bad guys are always coming up with new techniques, or new risks are being created. So it's a challenge we all face, and I think in addition to changing the approach to more of a risk-based approach rather than a checklist of requirements that were created 10 or more years ago, I think it's also working together on the right kind of training at both state and federal levels and with the industry, just to keep track of what is best practice or state of the art in building information security system.
I don't disagree with any of that. I would clarify my earlier comments because I'm sensitive to your take, which I agree with. You always have to be vigilant. You always have to be innovating. You can't believe that what you have is impregnable. But the risk-based approach really gives you the mindset that says you have to deploy a range of dynamic countermeasures, right? Not just the ones that we can talk about in this public forum, but other things that we and others do behind the scenes, right? And that's an area where I think more interaction between service providers and regulators can add some clarity to that.
Yeah, I do think it's important to remember in context, our goal as service providers is to enable the flow of commerce. So we're focused in the first instance on making payments happen. And the only reason, as we talked about before, that consumers feel confident in electronic payments is because they know they're protected if anything goes wrong. Last year in the U.S., there were about $6 billion in fraud losses on the credit and debit card networks. And you'll remember that's on a denominator of $4.9 trillion in payments processed. So we're talking about less than 5 cents out of every $100 in payments processed have some fraud component to them. So it's a very small, it's a fraction of a tenth of a percent. But we want to drive it out of the system entirely, and obviously want to continue to protect consumers. And as you correctly noted, criminals, as we deploy new technology, are not suddenly going to go find a job. They're going to find some other way to penetrate our system. So we do need to remain vigilant to make sure that we protect our customers.
Commissioner Leary, did you have a quick follow-up?
I did have a quick follow-up. Since I'm on the more mature, experienced end of this task force table, Mr. Goodwin for Green Dot mentioned that their focus target was really the unbanked or the underbanked. For PayPal and ISIS, is there a focused audience that you're looking at, or is the adoption with the under 30?
So I'll start. So I'd say for us, the focus is really mainstream America. E-commerce now is very much a mainstream activity, and certainly that includes the so-called underbanked. For us, we do have a commercial partnership with Green Dot to enable Green Dot cards to be used to fund a PayPal account. So that's one way, but also I'd say more generally, it's just the growth of prepaid cards in general that can be used on the PayPal system as a funding method. But it happens because the underbanked, are shopping. They do have mobile phones. They're shopping online even before they had mobile phones. But we're not really actively targeting them as a separate segment. We just include them in the broader spectrum of all consumers who like to do online shopping, and that's really our target.
Yeah, for ISIS as a platform, we're broadly inclusive. The appeal of our service is a portion of it is the new facility that we bring to bear. It's also the products and the brands that are contained within that facility. So, for example, with American Express being one of our institutional customers, they've got a broad base of users. They have a division known as Serve, which is also present in the ISIS wallet, which is a prepaid account, and that I think tends to skew more towards younger and, in certain cases, underbanked or unbanked. So we service all of those from a technology perspective and a handset perspective. Since we're smartphone based, smartphone adoption has reached the point where it's gone well beyond the tipping point, and it's adopted across all demographics and age groups. So we do see adoption and use across the broad spectrum, but as you might expect with a new technology, the fattest part of that curve are early tech adopters and people that are typically 40 and under.
Thank you all very much for your comments. We appreciate that. We are going to take a 5-minute break since we are officially now running slightly behind, and we will. Our third panel will be on virtual currency. Thank you.
Thank you.